Still on the slump side of things, U.S. stocks ended sharply lower yesterday, with all three major Wall Street indexes falling more than 1%. Technology shares led the decline as chipmakers extended recent losses amid concerns over demand and valuations. Investor sentiment was also weighed down by renewed tensions between the United States and Iran, adding to uncertainty in global markets. The Dow Jones Industrial Average fell 1.9%, while the S&P 500 and Nasdaq also closed firmly in negative territory.
Wall Street's main indexes tumbled on Wednesday, with the Dow dropping almost 1.9%, the S&P 500 shedding 1.6%, and the Nasdaq falling nearly 2%. Renewed tensions in the Middle East added to investor uncertainty, with President Donald Trump saying the U.S. would attack Iran again very hard following a significant exchange of fire overnight. Chipmakers continued to drag on the market, extending their recent declines. Shares of NVIDIA lost more than 3.5%, while Broadcom dropped more than 5%. Gina Martin-Adams is chief market strategist at HB Wealth.
We've had a pretty tough go for the last few days in the equity market, really starting in the middle of last week. We started to see a little bit of rotation out of technology stocks as the earnings season is finally finished. That was clearly the big catalyst for gains. Now we're starting to see markets react a little bit to friction that has reemerged in the Middle East. So you've got two different influences on the equity market right now. Investors rotating out of tech after the enormous run that it had had since the end of March, and Middle East tensions, which are flaring up again.
In other tech names, shares of Oracle, down more than 2% at the close, dropped further in extended trading after the company reported quarterly revenue that narrowly beat Wall Street expectations. Its results came amid concerns about Oracle's spending and AI-driven disruption to traditional software demand. The company also said it expects to raise nearly $40 billion through a combination of debt and equity financing in fiscal 2027. Shares of Supermicro nosedived 28% after the company announced plans to raise $7 billion through a series of equity and equity-linked transactions to fund component purchases for its growing AI server demand. And shares of trucking companies dipped after Amazon announced an expansion of its freight services, with shares of J.B. Hunt, XPO, and Old Dominion all suffering losses. Meanwhile, data from the Labor Department showed U.S. consumer prices increased 4.2% in the 12 months through May, the largest gain since April of 2023. While the Federal Reserve is widely expected to hold interest rates steady at its policy meeting next week, investors are now pricing in at least one rate hike by the end of the year.